Welcome to Explain the Charts. Today, we are analyzing the XAUUSD pair, also known as gold versus the US dollar, to understand the current market dynamics and identify potential trading opportunities. We'll be looking at the news affecting gold prices and correlating them with the chart data. Let's start with the daily chart, covering the broad trends. The daily chart reveals a clear upward trend for gold prices over the past few months. Recent news surrounding potential interest rate cuts by the Federal Reserve and the safe haven demand for gold during geopolitical tensions have contributed to this bullish momentum. Specifically, the price has climbed significantly since the beginning of August, breaking above several resistance levels. However, the recent price action shows signs of consolidation, with gold trading in a range around the $2,500 level. Now, let's switch to the 1-hour chart to get a closer look at the recent price action. The 1-hour chart highlights a more volatile environment, showing a mix of bullish and bearish signals. Gold has been testing the $2,500 level, which is now acting as both support and resistance. Breaking above this level could signal a continuation of the bullish trend, while a move below could indicate a correction. Looking at the recent price action, there are a few key things to watch for. The U.S. CPI report, scheduled for release later this week, will be a crucial factor in determining the Federal Reserve's rate cut decision. A softer-than-expected CPI reading could further support gold prices and potentially push the price above the $2,500 level. On the other hand, a stronger-than-expected CPI reading could strengthen the U.S. dollar, putting downward pressure on gold prices. Another important factor to consider is the movement of the U.S. dollar index. A weakening U.S. dollar typically leads to an increase in gold prices, while a strengthening U.S. dollar puts downward pressure on gold. Currently, the U.S. dollar index is showing signs of strength, which could limit the upside potential of gold in the near term. However, the potential for interest rate cuts could weaken the U.S. dollar, providing support for gold prices. To get a finer-grained perspective on the recent price action, let's zoom in on the 15-minute chart. This time frame will help us identify short-term trends and potential trading opportunities. The 15-minute chart shows a range-bound environment, with gold prices fluctuating around the $2,495 level. There's a clear resistance level at $2,500, and breaking above this level could indicate a short-term bullish move. However, the lack of a clear breakout suggests a potential for consolidation or even a short-term correction. To illustrate this range-bound behavior, let's focus on the candlesticks from the last 2 hours. Looking at the candles within this range, we can see that gold has been testing both support and resistance levels. The price has been bouncing back and forth between the $2,490 and $2,500 levels, indicating a lack of clear directional bias. It's crucial to monitor the price action in this time frame, as any significant breakout above the $2,500 level could signal a short-term bullish move. On the other hand, a break below the $2,490 level could suggest a short-term bearish move. In conclusion, the XAUUSD pair is currently in a state of consolidation, with both bullish and bearish signals present. The near-term outlook for gold is uncertain, with the U.S. CPI report and the U.S. dollar index being key factors to watch. Gold is expected to trade within a range around the $2,500 level, with the potential for a breakout above this level if the CPI report is softer than expected. A break below the $2,490 level could indicate a short-term correction. Traders should monitor the price action closely in all time frames, particularly the 15-minute chart, to identify potential short-term trading opportunities. Remember, trading in the financial markets carries inherent risks, and it's essential to conduct thorough research and manage your risk effectively. Thank you for joining us on Explain the Charts, and we look forward to seeing you in our next video.